Imagine someone asks you to buy a sealed box, and the price tag is real, but the label is still partly covered. That's the feeling around ITG Inc.'s planned IPO. In this episode of The Cursor Stocks, the question is simple: what would have to be true for this IPO to make sense? ITG Inc. is the name on the deal, and ITG is the short stock market nickname people would use to find it. The company is expected to trade on the NASDAQ, which is one of the main places U.S. stocks change hands, so the public doorway is clear. The business story is the part that still needs care. Here's why that matters. A normal IPO preview starts with what the company sells, who buys it, and whether customers are coming back. With ITG, the clean public company description is not useful enough to explain the actual business with confidence. So this preview has to be honest. The deal terms are clearer than the company story. The IPO is currently set for July 1, 2026. An IPO is the moment a private company starts selling pieces of itself on the stock market. ITG plans to offer about 19.5 million shares, with shares priced between $19 and $22, and the deal points to a raise of about $429 million at the top end. Think of the price range like the sticker range on that sealed box. At $19, investors are paying the low end for each tiny ownership piece. At $22, they're paying the high end. That few dollars may sound small, but across millions of shares, it changes how much money the company can raise. Because the final offer price is still pending, the clean way to say it is this: ITG is expected to price around $22 a share if the deal lands where the current deal amount implies. That is not the same as saying the stock will trade there later. Once trading starts, buyers and sellers can move the price quickly. The missing number is just as important as the visible one. A final IPO valuation has not been set, and valuation means the price tag investors are putting on the whole business. Without that full price tag, you can't honestly compare the company to its sales, profits, or competitors yet. The box still has a covered side. Why would a company go public before every casual viewer knows its story? Usually, it wants money to grow, more visibility, and sometimes a way for early backers to eventually sell. For a new investor, that means the IPO is not just a launch party. It's also a fundraising event with real trade-offs. If ITG prices at the bottom of the range, the raise would be about $371 million. Near the middle, it would be about $400 million. At the top, it gets to about $429 million. That's a lot of capital. But without clearer operating numbers, the question becomes sharper. What is that money going to build? This is where beginner investors can learn something useful. The first job is not to guess whether the stock pops on day one. The first job is to understand the engine. What does ITG sell? Who pays for it? Why would those customers keep paying? Until those answers are clear, the headline raise is only half a story. A strong IPO story usually has a simple customer problem at the center. Maybe a company helps packages arrive on time, buildings get built faster, or software run more cheaply. With ITG, that everyday bridge is not clear enough to state as fact. So the smart move is patience, not filling the silence with guesses. The bull case, if you strip it down, is about possibility. A company that can raise hundreds of millions on NASDAQ may have serious plans, serious backers, or a market it wants to attack. But possibility is not proof. The central question comes back again. What would have to be true for this IPO to make sense? One thing that would have to be true is demand. Customers would need to want what ITG sells badly enough to keep buying it after the IPO spotlight fades. Revenue is the money coming in before expenses, and for a young public company, rising revenue can show that customers are voting with their wallets. The catch is that revenue alone does not finish the story. Profit is what's left after the bills are paid. A company can bring in more money every year and still lose money if hiring, marketing, equipment, or debt costs are growing even faster. That's why the sealed box image matters. Price is visible, performance is not. For ITG, a clean full-year revenue and profit snapshot is not available in the hard company facts here. That doesn't make the IPO bad by itself, but it does make the preview incomplete. If you're new to investing, this is a major lesson. When the basic business numbers are missing, confidence should go down, not up. Competition is another missing piece. Every business has someone else trying to win the same customer's money. Without a clear description of ITG's actual market, naming rivals would be guessing. And guessing is exactly what IPO excitement can tempt people to do. A good investor wants the customer map before the stock chart. The valuation tension is simple. Investors are being asked to look at a deal that could raise roughly $429 million, while the whole company price tag is still not finalized and the operating story is not easy to verify. That doesn't answer the IPO question. It makes the question louder. The timing is at least clear. The offer status is pending, the expected offer date is July 1, 2026, and the planned home is NASDAQ. After it lists, the story changes from paperwork to public trading. Then the market will start giving ITG a moving price every day. After it lists, watch 3 things. First, does ITG explain its business clearly enough that normal investors understand it? Second, do revenue and profit numbers appear, and do they improve? Third, does management show what the IPO money is for? Those answers matter more than a dramatic first-day move. So here's the balanced view. The dream is that ITG becomes a real public company story, with a clear market, growing customers, and useful capital from the IPO. The doubt is that, right now, too much of the box is still covered. No buy or sell call, just a cleaner way to read the setup. If you've never bought a stock, this is exactly how to slow an IPO down. Name the company, find the ticker, check the price, ask who pays it, then ask whether the numbers support the story. Follow the cursor stocks, and the next listing won't feel so confusing. This video is for information and education only, not financial advice.